Did you know? You can claim back some of your business costs from up to 7 years before you officially started your business. That's right. Treat these costs as if they happened on the very first day of trading. In this guide, I'll explain self-employed expenses in 4 simple parts. Part 1. Expenses you can't claim. Part 2. Expenses you might overlook. Part 3. Other claimable expenses. And Part 4. Tips to save money on your taxes. As a self-employed individual, you only pay tax on your profit. Profit is simply your income minus your allowable expenses. The more expenses you can claim, the less tax you'll pay. It's crucial to keep accurate records of all your business-related costs. Before we get into the nitty-gritty of what you can and can't claim, let's cover a few basics to keep in mind. First, your expenses must be directly related to your business. If you use personal items for both work and personal use, like your car, you can only claim the business portion of the costs. Second, as a sole trader, you and your business are one and the same. So, taking money out for personal use isn't a tax-deductible expense. Lastly, you've got 2 main ways to track expenses. Simple cash basis. Write down what you spend as soon as you spend it. Detailed traditional accounting. Record expenses when you're billed, even if you haven't paid yet. Choose the method that best suits your business. Let's start with the no-go zone. Some expenses are off-limits, like fines and penalties, for example, parking or speeding tickets. Personal expenses, for example, holidays or personal clothing. Initial training for new skills. Private medical insurance. Childcare costs that is not under an allowable employer scheme. And travel costs to your regular place of work. Next, let's look at expenses you might miss. Don't let these sneaky expenses slip through the cracks. You can claim the value of personal items used for business. Charity donations don't count as a business expense, but they can reduce your tax if made through gift aid and claimed in your self-assessment return. Keep track of parking fees if you pay through a personal account. You can claim costs incurred up to 7 years before starting, such as market research, website setup, advertising, or stock purchases. If you work from home and pay rent, claim a proportion of it for your business. You can claim fees from payment gateways like Zettle and Go Cardless. Wondering if you can claim those home office repairs? Here's a quick breakdown. Fixing just your workroom, claim the full cost. Fixing the whole house, claim the part related to your workroom. You can't claim for fixing a non-workroom. Let's consider some more common claimable expenses. If you work from home, you can claim a portion of rent or mortgage interest, electricity and heating, broadband and phone bills, council tax, and cleaning costs. You can work out the actual cost or use HMRC's flat rate, £10 per month for 25 to 50 hours of work, £18 per month for 51 to 100 hours, £26 per month for over 101 hours. For example, if you worked 40 hours from home for 10 months, but worked 60 hours during 2 particular months, you can claim £136. If you use your own car for business journeys, you can either calculate your costs, figure out how much you spend on gas, insurance, and car repairs for work. Use a simpler method. Claim a fixed amount per mile driven for work. You can claim 45 pence per mile for the first 10,000 business miles, then 25 pence per mile after that. For motorcycles, you can claim 24 pence per mile. Also, you can claim public transport, parking fees, and tolls. For office cost, you can claim stationery, printer ink, and postage as regular business expenses, and for more expensive equipment like computers. If you use the cash basis accounting method, you can claim the full amount in the year you buy it. If you use traditional accounting, you can claim the cost as capital allowances. This spreads the cost over several years, giving you a tax break gradually. For professional and legal cost, you can claim accountant or legal fees, and subscriptions to industry-specific publications. For insurance, you can claim professional indemnity insurance and public liability insurance. For marketing and advertising, you can claim website hosting, social media ads, and business cards. If you have employees, you can claim salaries and wages, employer national insurance contributions, training to update existing skills. For finance cost, you can claim bank, overdraft, and credit card charges, and interest on business loans or leasing payments. Now, let's consider some money-saving tips. Separate business and personal accounts. Use a dedicated business account for all transactions. Track all expenses. Even if your business makes a loss, record everything. Losses can reduce future tax bills. Know when to use flat rates. If actual costs are higher, claim those instead. Don't overlook small costs. Things like postage and parking fees add up. Keep detailed records. Remember, accurate and detailed records are crucial for claiming expenses and avoiding potential tax issues. Consider using accounting software such as QuickBooks or Xero to streamline your record-keeping process. And always save receipts and invoices. If you're unsure about any aspect of self-employed taxes, it's always a good idea to consult with a qualified accountant. They can provide tailored advice and help you maximize your tax savings. Here are some common mistakes to avoid. Always separate personal and business expenses in your records. Don't forget, you can claim up to 7 years back. Forgetting capital allowances. Big purchases like machinery should be claimed this way. If you are VAT registered, reclaim VAT on your business purchases. By understanding what you can and can't claim, you can significantly boost your tax return. Remember, accurate record keeping is your secret weapon. If you're unsure about anything, consult a tax professional. Have any other tax-saving tips or expenses you've claimed? Share your expertise in the comments below.